Traders, stop selling bottoms and buying tops and pay attention. Markets aren't completely random. They move in structures. And when structure, liquidity, and behavior all line up, that's when moves get interesting. Today, I want to show you why Bitcoin's current structure looks very similar to a 67% breakout we just saw in Google, and why the data under the surface is quietly turning bullish. But before we get into the charts, let's talk about what's happening behind the price. Let's go! First, we're seeing strong aggression on the buy side. Bitcoin's taker buy-sell ratio on Bybit just hit 30.33. That's not normal trade behavior. That tells us aggressive buyers are in control. Large, long positions being opened, with buyers hitting the market instead of waiting. When you see taker dominance at these levels, it usually means smart money is positioning, not reacting. Now you tell me, how does this equate to a bearish argument? Let me know in the comments. And here's something subtle but important. Bloomberg has switched Bitcoin's price notation to 1/10 of a million. That might sound small, but psychologically, that's a big shift. Bitcoin is no longer framed as tens of thousands. Instead, it's being framed in hundreds of thousands. That is how institutions think, people. And one more thing worth noting. X is launching smart cash tags, allowing support for contract addresses and live price data. That's infrastructure. That's financial integration. That's cryptocurrency becoming native to global platforms. So while price consolidates, the plumbing is getting stronger. Now, let's see how all of this lines up with the charts. Now, let's start with something that most people missed. Google recently formed a clean cup and handle pattern, and from that structure, it rallied almost 67%. Now, look at Bitcoin. Bitcoin is developing a very similar cup and handle pattern on the higher time frame. Now, I'm not saying Bitcoin has to copy Google, but what this tells us is that this particular structure favors expansion as long as the key levels are maintained in this type of scenario. It's important to remember, when you're comparing something like Bitcoin to something like Google, the markets are not relevant to each other. But what is important here is the actual pattern, the chart pattern itself. Because these types of patterns, what they are is basically the emotions of participants being expressed through price. So, if a certain pattern develops and has a higher probability of producing a certain type of outcome, it's reasonable to expect that outcome to develop in whatever market that pattern develops in. Because again, it's all about the emotional outcome of the participants involved. So that's why comparing something like Google to Bitcoin makes sense. On the Bitcoin monthly chart, the structure is still perfectly intact. This is still a higher time frame bullish setup. Nothing here suggests the macro trend is broken, especially right now. As long as this structure holds, the bigger picture continues to be bullish. As you can see, this monthly candle is trying to work its way back up to the previous month's high. Keep a close eye on that. On the weekly time frame, Bitcoin is currently sitting on the third tap of this structure, as you can see right here. Third taps are very important. Historically, this is where markets either break out with strength or consolidate one more time before expansion. The question is, do we get the 50% move higher from here, or does price need more time? This chart is where we will get that answer. On the daily chart, Bitcoin has done exactly what it should have done. Price moved into the daily supply zone and reacted lower. That's not weakness. That's respecting structure. What matters now is where price stabilizes. For example, Bitcoin may push higher over the next few days through this supply zone, or it may reverse, fake everyone out, and break below this minor support, pushing into the order block that's sitting below. You, as a trader, it's your job to be prepared for both scenarios, especially if we test the lower order block, because that is where you should be anticipating a bullish reversal and measuring your risk and preparing for this scenario rather than reacting and getting short like everyone else. On the 4-hour time frame, Bitcoin is re-entering the consolidation zone from which the previous move started. Strong markets don't just move in straight lines. They come back, re-accept structure, and then decide the next leg. This is very healthy price action. I say this a lot. Higher lows often lead to higher highs, especially when you come into a consolidation and that midpoint of the consolidation often acts as a support or a resistance level. Watch for that. Right now, where price is consolidating, it's very possible that price can pull back briefly into that area. Don't be fooled by that. On the 2-hour time frame, Bitcoin is currently respecting the 100 exponential moving average. As long as Bitcoin holds above this EMA, short-term bullish scenarios remain valid. If we break this, then we have to reassess. It's that simple. The market speaks and we listen. The market provides evidence and we adjust. In situations like this, you want to work with the market, not think for the market. As you can see, we tapped the 2-hour order block. If we tap that order block again, you're looking for bullish reversals. If it breaks the order block, that's the situation where we have to adjust and see what new levels the market provides from there. Now, let's look at Ethereum. On the weekly time frame, as you can see here, Ethereum is moving higher while respecting the 100 exponential moving average. Price tapped into weekly support, and both the trend line and the exponential moving average are helping price push upward. That's a strong structural sign. Again, don't be confused by the consolidation. This structure is bullish, and this illustration that you see on the chart is the likely scenario. This is especially important if price pulls back into that trend line. Look for bullish reversals, people. On the daily chart, Ethereum has broken out, as you can see right here. Now, price is coming back into the bullish order block. This is exactly what strong markets do. They break out, then retest demand, then continue. If this order block holds, Ethereum stays well positioned. It is situations like this where you do not want to become opinionated, because it is very easy to argue that this is a bearish setup or some kind of bearish situation. But none of the supports have broken, and this can easily reverse and become a long. You have to understand, you can't just focus on the entire structure here. You have to look at what's happening at the most recent price action, because that carries the most weight. So when you put everything together, buy-side aggression is increasing. Institutions are reframing Bitcoin psychologically. Infrastructure continues to expand. Bitcoin structure remains intact. Weekly is at a key decision point. Lower time frames are behaving constructively. Ethereum continues to show strength. This isn't chaos. This is compression before expansion. And one more thing. I'm publicly taking an account from 10K to 100K. Fully transparent. I've taken my first trade, which was on Render. And right now, I'm patiently looking for the next high-quality setups. All trade updates, entries, exits, and reasoning are shared in my free Telegram channel. Telegram link is in the description. Make sure you join. It's the only way to get into that channel. Also, I'm using the Profitz Precision platform to track and manage every trade properly, so everything stays clean and accountable. Profitz Precision link is also in the description. Check it out, people!